What is good, guys? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down some key levels to watch for on SPY to determine whether or not this rally will continue to cause the market to fly to the upside, or if we're going to get a big rejection in this particular level. So I'm going to break down why the rejection is still very possible and what could actually trigger that, as we do have a very important date ahead of us, and that is the day that the US will hit its debt ceiling limit. And I'm going to talk about how this has affected the stock market in the past and how this may affect us in the future. I'm also going to break down some important things about Elon Musk. He said some huge things about the 2023 recession that he is seeing, and he does believe it's going to be to the extremity or near the extremity of 2009. Now, before I break anything down about what Elon Musk said specifically, how this could affect Tesla, and why this week is going to be huge as we have some important levels to watch, I got to mention a couple of things real quick. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any can be a free Tesla share. It's a limited time offer. The offer ends in just one day. So check it out before they run out. With that out of the way, let's get on with the video. So looking at the market, I want to note something very important. SPY is on this very, very nice uptrend. I did mention that there is most likely more room for us to continue pushing, but I did do one thing I want to adjust, and that is my estimate of the top. It looks to me like the top might be a little bit higher than expected before, because there's a possibility of a fake out rally. I'm going to talk about why that is. So what's going on right now is people are watching SPY pump. They're so excited. And if we break the descending broadening wedge resistance, which looks like this, right? I know this is kind of small, but look at the line right here. We have this line where SPY keeps getting rejected off of many, many times, right? Well, I think we're going to break past it, and they're going to try to convince everyone the market's going to be super bullish. Now, to convince me that the market's going to fly, I'm not too worried about this trend line. I'm not worried about us breaking out of it. I'm worried about 410. If we break 410, hypothetically, right, you always have to be prepared for anything. If we break 410, then this thing could go flying up, the market could fly up. But I think that's less likely to happen, right? And I've been talking about that in this video. To convince us, what I think is going to happen is, I think SPY is going to fly maybe to like between 402 to 406, a little bit higher than what I thought before. And I think around this level, we might see a big bearish catalyst that causes the market to come down. And that's just my prediction. I'm going to show you why I believe that from the technical side and the news, the data that is suggesting that. To start us off, Elon Musk, he mentioned some very important things. Elon Musk warns of more pain as he is seeing commercial real estate prices fall. He mentioned the fact that in 2023 he sees a major recession, and he thinks it's going to be comparable with that of 2009 levels. He's seeing lots of pain that is yet to come. I apologize about that ad. But anyways, Elon Musk also mentioned that people should be very prepared for the pain to come. He mentioned the fact that he thinks the Fed is being a little bit too extreme on their policies, and he thinks we're about to see a big, big hit. He also mentioned the fact that this is affecting Tesla, and the fact that the price cuts were obviously necessary, but he kind of saw it as a punch to the face in a way at the same time. So Musk is warning us that there is likely going to be more pain to come. He also mentioned that, or at least one thing I must mention, is the fact that historically the stock market rarely ever bottoms before the recession is confirmed. Now, could we be in a recession? Sure. But the news outlets have not accepted this yet because of unemployment not necessarily going up to the extreme levels. It's still relatively low. The jobs market is still relatively strong. So we're still waiting for that pain. And that pain is what's incentivizing the Fed to be more hawkish. Now, when I say hawkish, am I saying that the Fed is going to give us like a 700 basis point rate hike? No, I'm not saying anything like that. What I mean by that is they may continue to give us like more of these 25 basis point rate hikes, but their tone, what they say, could be very hawkish. They might start to say things like, oh, the soft landing is less likely. There needs to be more tightening. The jobs market is still too strong. We have to be more strict. Things like that. And they may even say something like, oh, we have no plans of pivoting this year. So please be very careful, right? Just for example, they could say quite hawkish things, and I think that's very likely. Now, that's the first factor, and you have to remember the FOMC meeting is going to be in 2 weeks. The big day is going to be February 1st. But before that, we also have big things coming out. We have lots of earnings. We have Morgan Stanley, Goldman Sachs, Netflix, I think AMD in a couple of weeks. Tesla's is in less than 2 weeks, 10 days from now at the time I'm recording this. But what's the big factor, the big black swan event, okay, that people are kind of overlooking? And I think this is what could like catch people off guard. Look at what Janet Yellen just said. She's the Treasury Secretary. She said the US will hit its debt limit on Thursday. We need to look at this carefully because you have to look at the context of this. The US Congress is divided right now. The left controls the Senate, the right controls the House. This could lead to some financial chaos and some stress in the credit market. The stress in the credit market could lead to the 10-year Treasury yield going up and maybe even the dollar starting to push up. The dollar index, this will likely be correlated with the VIX going up and the stock market maybe starting to come down a bit, maybe even in a harder manner. Now, can I prove that this is very possible? The answer is yes. In 2011, this happened. We were fighting for the whole like debt crisis, and this was actually shortly after the 2008 to 2009 financial crisis situation. And this started around May time. And what I was doing is I was looking at the monthly charts on SPY. And please remember this because SPY, the QQQ, how they move will affect Tesla. So in 2011, what happened? The month of May came. This is the time that the debt ceiling crisis started. And when did they finish the negotiations? I think this went on until like July to August time, somewhere around there. So look at what happened to the stock market. We saw the stock market go, it basically crashed about 20 to 21% in just a couple of months. In less than 4 months, it crashed 20%. And the debt crisis played a big role in that. I want to note that it is very possible. Now, in 2011, both the Senate and the House were controlled by one party, but that did not change the fact that there were still lots of very, very strict negotiations because the US economy was in such a dire state at that time. So I'm not saying, the drop is all there was to this or the debt ceiling crisis, but that did play a big role. Then this happened again in 2013. And I actually noticed another pullback in the markets. 2013, it wasn't that extreme, luckily. I think it happened around August time. I believe it was around here. So we saw the market go and see about let me see, I think it was, no, I'm sorry, it wasn't August, it was around May time. So we saw the market go from the 140s all the way down to the 130s. So we had a pretty significant drop at the time. It was over the debt ceiling, but this was resolved pretty quickly. It wasn't as extreme, and the market started to push up. And I think the market dropped about, I believe it was over 10%. And you have to remember, during this time, the Senate was controlled by one party, the House was controlled by a different party. So the negotiations were tight, they just weren't as extreme. And this was actually resolved quickly, but it did lead to some pain in the stock market. Now, 2021 comes, the same thing happened, except this was quickly resolved. It did not take like an extremely long period of time. And this was in a different context because we had quantitative easing, we had the Fed putting the money printer on, artificially pumping this market. We also had low interest rates. And also, you have to remember in 2021, the left controlled both the House and the Senate. So this was easy to actually get past. It actually took them just a couple of months to really get past this. So it did not actually affect the market as badly when this happened in 2021. My point is the whole debt ceiling crisis, it did not actually guarantee the market will crash, but there have been many instances in the past where the market did take some big hits, seeing 10 to 20% drops once we actually hit the limit. So there is a possibility that when Janet Yellen comes and starts talking, oh, we have to negotiate about the debt. What are we going to do? Clearly, the right wants less spending, but the majority of people are probably going to, once again, try to raise the limit again. And I don't think that we're in a situation where the debt is going to like really hurt us relative to how much it's going to hurt us in many years and decades to come. But I do believe they're going to raise it again. It's going to take quite a while to come to a consensus. There's going to be lots of negotiations, lots of fights, and it's going to be difficult. It's going to lead to lots of pain in the credit market, in my opinion. So, what I think is going to happen, and this is why, you know, I still stand by what I say. I think that the market is going to continue to pump, but then once we hit the dead limit, how are we going to continue to pump really hard? I'm not too sure about that, right? If we are going to continue to fly, if SPY's going to go to like 420, 430, we have to break 410. That's going to be a very strong resistance. If we break that, then it is a possibility, but I think that's unlikely. All right. We have to be prepared for anything, but I think it's unlikely. I think what's more likely is we're going to push up, hit this resistance around this like 406 to 402 ish level. It's very hard to tell exactly where. And then we're going to see this slowly start to come down, start coming down. By the time we get to February, we could see the market come down even harder after FOMC, in my opinion. So I do think we're coming closer to the top. We're only like a couple of dollars away on SPY away from it. So like another $4 to $8 are left of the pump before this thing starts tanking pretty hard, in my opinion. And I'm going to show you some more proof of that. And I'm going to break down how this could affect Tesla in just a few minutes. On the VIX, we have a potential bullish divergence that's forming on the RSI. So right here, quite clearly you can see this divergence. The RSI is not doing what it was doing before. So like compared to these levels, there's this divergence. Makes me think the VIX is going to get ready to bounce over the next few days. It's very possible. On the QQQ, I believe this thing, it technically has potential head and shoulder like formation, but we have a gap up here. So I think tech is going to be actually pump this thing up another couple of dollars. I think Apple is going to lead it. I think this thing could go to this like 285 to 286 level. So we do have some room to pump up before we get a big rejection. I'm going to go into more details about this on SPY in just a couple of minutes. And also, sorry, on the daily, on the QQQ, we also have a potential bearish divergence that's forming, right? Look at where the RSI was when we hit like 296 compared to where it is now. That once again can lead to a big reversal. On the dollar, we're getting close to 100. And remember, this thing bounced off this 100-ish, 100 to 101 level before we came down to 101. Huge bounce to the upside. The stock market actually came down pretty hard, right? It could happen again. The 10-year treasury yield is coming very close to a previous resistance, which is now support area, and an area where we actually bounced off of in the past, and that's going to be this 34-ish level. We could see this come down just a little bit and maybe start to push up, or it might start trending up now. We actually have a bullish looking hammer candle that formed. So I'm going to watch this very carefully. If this does start trending up, it's going to be bearish for the markets. This could trend up even more because of the debt ceiling crisis that could re-emerge. And I think the mainstream media is going to go nuts over that. It's just my theory. But let's talk about SPY. There's one more thing I want to mention. So just to be clear, guys, remember this. If SPY could break 410, which I don't think it's going to do, but if it does, that could be bullish. You have to watch that just to be safe. But I think this is a trap. And I don't think we're going to break 410. I think this whole move is a trap. Just like 408, when we hit 408, because of the descending broadening wedge. Notice how we would try to break out of this resistance line, this line we keep hitting and failing. And we failed every single time in 2022, except for one instance where we had kind of like a fake out, a fake pump to like 408, then we ended up coming down. Well, I think what's going to happen is we're going to see something very similar. We are, in my opinion, going to break this resistance. I think so. And I think what they want is everyone to turn bullish. They want everyone to get excited. They want everyone to start buying calls. It's a trap. People, and that's just my theory. They want everyone to get excited once SPY gets to like 400 plus, 402, 403, 406. Everyone starts to party. Everyone starts buying. Everyone thinks we're about to explode. And from a technical standpoint, it may look like that. But I did see some divergences on the dollar and the other indicators I showed you. And once we get to this level, earnings may not be as good. Maybe the Fed speakers say some things, and we're going to get closer to the FOMC meeting. And then finally, the debt ceiling limit comes, and the market starts to panic. Oh, wait a minute. We're not in a perfect economy. We're not in a good economy. Things are still tough. And these negotiations are going to be very, very tense in such a divided and polarized situation that we are in Congress and the USA in a way. I'm not trying to get political here, by the way, but it's the truth. And I think these negotiations, they're going to be strict. They're going to lead to lots of uncertainty. The market does not like uncertainty and pain in the financial sector in America. And that's part of the reason why I believe SPY might peak here. From a technical standpoint, yes, we have an uptrend. Is the uptrend broken? No. We look like we're going to keep pumping. And I just want to adjust my previous target. I did say 402, but I want to say about 402 to 406 is my range. Could be anywhere between there. And I do believe we're going to peak around here and the market might start downtrending after that. And the debt ceiling cycle could kind of like kick it off. Then we have the Fed that can make it worse, and etc. What does all this mean for Tesla? Okay, I'm coming back to Tesla and also what Elon Musk said. Elon Musk is telling everyone, hey, there's going to be a recession. The pain is not over yet. This recession is going to be quite severe. It's not going to be a soft landing. It's going to be comparable to 2009. What I'm seeing is for Tesla, could we continue to uptrend? It is still very possible if the market holds up, if the NASDAQ and QQQ continue to pump. Maybe Tesla holds up and this thing wants to keep going. It's very possible. But if we do end up coming down, what could happen is Tesla comes down and tries to form this like inverse head and shoulders like formation. But it's going to be very hard to validate this because it depends on the news. And if we pump approaching earnings, let's just say earnings is coming on like the 25th and Tesla like starts pumping, we come down, then we pump. Well, I don't expect earnings to be very strong for Tesla. I'd be very careful. And there is likely going to be more downside to come. In my opinion, okay, non financial advice, but over the next few months, this 101 level on Tesla might get broken. We could see this thing below 100. And I think that's very likely to happen. It's just my opinion. I still love the company. I'm still very bullish long term, but that is still just one of my targets. I just want to mention to everyone for the medium term, I still believe there's more pain to come. My opinion will be adjusted if the market could actually get a huge breakout and SPY breaks like 410. But as of right now, I'm not seeing that happen. I do believe more pain is yet to come. And I want to warn everyone from the technical standpoint, from what Janet Yellen said to the catalysts coming out for this week, and based off what Elon Musk is warning everyone, there's more pain to come in this market. So anyways, guys, thank you all so much for listening. Please have a fantastic, spectacular rest of the day. Sorry, I couldn't close that. I was trying to close that. But anyways, there is more pain to come. So please remain calm, cool, and collected. Excuse me, sorry. And I want to note that the future is still very bright, but I still believe there's more pain to come. I believe the market's going to reverse either sometime this week or maybe going into next week. And I just want you guys to be prepared for that. Also, remember the market's going to be closed on Monday for Martin Luther King Jr. Day. Okay, so no trading tomorrow. We're going to be back in action on Tuesday. Thank you for listening. Have a great weekend. Remain calm, cool, and collected. Tesla stock is still amazing. Tesla to the moon because the long term future is still very, very bright. And peace out.